Welcome to another episode of the Tuesday Market Watch. Today I want to go through sort of four stocks that I think have real value in the market at the moment. Now the first one is Apple, okay, and everyone's saying, okay, well, Henry, you've really jumped off the fence here and said Apple, haven't you? So if we look at Apple, Apple has someone that has consistently given good earnings quarter on quarter on quarter. They are a brand. They're someone who is continued to be the market leader in the areas that they have. They've also continually brought out new products, and anyone who is an Apple user, if I said to you to start using an Android, you'd probably look at me going, Henry, shut up. And that's probably the response that you would give me. And as vice versa, if it's an Android user trying to use Apple, you're like, get that piece of crap away from me. How do I give me a normal phone? And that's it across the board. But Apple have a really good brand. Their laptops are really good. Their phones are decent, and they are continually making new products and new revenue streams between Apple TV, finance, so on and so forth. But regardless of all that, let's sort of look at what's after happening here over the last year and a half. Because let's be honest, the last year and a half in the stock market hasn't been great. Okay, it hasn't been great. It's hit sort of everyone since the beginning of 2022. It has been in a free-for-all for most stocks, except energy and sort of oil. So if we have a look at this, we will get the ruler. We'll look at the top here. So if we look at the very high where Apple was at 182.74, I understand that's not the real value of where Apple was because they have split the shares numerous occasions, numerous times. But it went down to the low, which was 32%. So I'm rounding it up there. So 31.92. So it dropped 32%. Now, in the grand scheme of things, that hasn't been a huge drop. Okay, it hasn't been a huge drop. It's one of these things that it sort of held its own. Yes, it has dropped like the rest of the market, but in compared to other tech companies, this has done pretty well. Now, some of the reasons that this has done pretty well, if we look here across the earnings, again, something I talk about, the first bad earnings here was 2016. Okay, it is just a money-making machine. Now, yes, some arms of Apple are making much more money than others, and yes, I understand cables and wires are bringing in 12% of the revenue, and they will probably get hit by that once the EU regulation comes in and they have to start using the USB-C instead of the one that they use already themselves. But time will tell. They'll probably counteract that in some particular way in Europe, but across the rest of the world they're going to have different cables to everyone else. Now, if we look at this at the beginning of 2023, we've had a little bit of an upward take in most of the indices in the US. Okay, now why has that sort of happened? One, we have people looking at this and going, well, the economy is not as bad as it first thought. Two, jobs are still being created. And three, inflation is slowly coming down. You have the Fed is talking about, instead of going 0.75 basis points down to 0.2, and that has been quite bullish across the stock market since the beginning of 2023. Now, do I expect this to continue being bullish? No, and I don't mean across Apple, I mean across the actual stock market over the next 6 months. I expect to be more of this, pretty flat, pretty sideways, moving in a sort of a direction, and then by the end of 2023, I would expect us to be, and on the likes of Apple here, have a higher high, but on the Nasdaq, the S&P, and the Dow, be very close to that high, or at least taking out the previous high. That'd be my consensus for 2023. Yes, I understand that's a little more bullish than most economists out there. But if you look at any year after a crash, there's been huge returns directly after that. Now again, so time will tell. We'll see, will history repeat itself, because the probability of that happening is extremely high if you look back at previous data. Now, more into Apple. Now, so in this particular scenario, Apple has moved, I think it's about 8% already this year. So if we go back to about there, from the low up to where it is today, it's actually up higher. It's up 12%. So since the beginning of 2023, it's up 12%. Now, I know a lot of people who are looking and sitting on their hands going, oh, is it a good time to invest? Is it not a good time to invest? Well, Apple has dropped 30% down to the low here, which means then you're getting the likes of Apple at a 30% discount. Do you expect Apple to continue making very good phones? Do you expect them to continue doing what they should be doing? And do you expect them to continue doing increasing earnings quarter on quarter? And if you look at a track record, yes. So this for me is a pick for 2023. I do expect this to continue running, but also it gives you a dividend. And I understand it's not a great dividend, but they give you a dividend as well. So 0.23 here, again 0.23, 0.23. So yes, you do get a dividend each quarter. And if you look at this, if you buy the ex-dividend date, so the ex-dividend date, the next payment is the November. As long as you buy before the 4th of November, that's an ex-dividend date. So if we look at this, March, so historically the last one, so Apple follows the proper calendar year. Okay, so if you look at it, each quarter is January, February, March. It's every 3 months. Okay, so that's when the quarter happens. So the idea is that we should be coming up with a dividend quite soon, shortly after earnings here. So if we look at, we have earnings, then we have dividends. Okay, earnings, then we have dividends. So it follows this same pattern. So we have, if we have a look at here, we have earnings coming out in the 2nd of February. So if we buy this stock in around or before the 2nd of February, if you think the earnings are going to be good and you think they're going to be much better than expected, you'd expect Apple to continue rising. But if it's something that you just want to hold on to and you're not sure about getting it now, well, if you get it shortly after the earnings or before the earnings, you will be eligible for the dividends that comes out shortly afterwards. The second one that I want to go through is Nike. So Nike has had a really good year so far, or even a very good back end of last year, which is quite different to a lot of the stocks out there. You saw Apple has had a pretty good 2023, but again, if we look at from here September or the very beginning of October here, it had a pretty big run. So we had a horizontal level here. We wanted it to bounce off there. It broke through, retested the bottom, came back down, went up, retested again. And then after that retest, look at the gap up, and the earnings here were extremely good. And this is why this has had such a good run from the end of last year. One, that it had a little bit of a run because people were looking at it as undervalued. And then two, once it come back to here, the earnings was much better than expected, and that is what has continued so far on this. Now, ideally to invest in this, I would like some sort of pullback here, but in the grand scheme of things, it really makes no difference whether you buy it now or whether you pull back to there. That is 6%. Okay, if you're holding on to the underlying asset, you're buying 1% of it. It really makes no difference whether it's 6%. Now, if you're buying all of your money, getting in on it, look, I would particularly sort of want to pull back. If you're looking to trade this, I want this to come back to this trend line, come back to this area. It has to come back to this floor. So we've have a couple of touches here, comes back. I need it to come back again, and we could be in a point where we could actually start potentially trading that, okay? But again, if we look at the highs up here, Nike dropped down to the low. It dropped 54%. So that's a little more like what happens in tech. Most companies drop to between 30 to 60%. That's what's after happening in a lot of these tech companies. And I understand that Nike is not a tech company, but that reflects sort of the Nasdaq as a whole, a little rather than these smaller companies that haven't moved, or the likes of Apple, who have only dropped 30%. But this here is sort of an indicative of what's after happening. It's after dropping 54%, and since the back end of last year, it's actually gone up 56%. Okay, so I understand that's after dropping 54%, but it's actually gone up 56%. And the reason that it's gone up so much is because it's at a cheaper rate here than it was up here, if that makes sense. So the values don't add up properly. For it to go back to where it was, so from this point, for it to go back to there, it would be 118%, or just under 117% return to get back to where it was, which would be a really good return on investment. If we look at the beginning of the year, for this one, from here up to where it is now, it has done another 8% this year. Now, when we put that into context, an 8% return on a year. So we like to trade indexes, we like to trade funds, we like to trade stuff like that. So people like to have slow and steady passive incomes. And if you buy the sort of the S&P 500, which is the biggest ETF or index out there, it generally returns over the last 40 years 10% return. This is an 8% return since the beginning of the year. Yes, we can have big swings like we've had, but the question is if we look at Nike, since the last bad earnings was the back end of 2022 or early 2022, when the sort of the pandemic was in its prime of what we're doing in lockdown. So it's had 1, 2, 3 bad earnings there. But prior to that, the last one was 2012. So do we think this is another well-run company? Yes, it is. Absolutely. It generally makes earnings year on year, month on month, quarter on quarter. It generally hits these targets. Now, also, it gives us a dividend, okay? And it gives us a dividend slightly before earnings. If we look at it, we had earnings there on the 22nd of December. And we had the dividends on the 2nd of December. So we have the 2nd of September, July. So it looks like it's the 1st. Okay, so this is the 23rd. So we would expect at about the first week of March. Now again, you have to buy it on the ex-dividend date. So the ex-dividend date looks like the beginning of the month. Okay, so I would say probably the 1st of March, 2nd of March, that's when the ex-dividend date would be without having a quick look at this. So that's when we would expect to buy it. So if you're looking at this as a dividend as well, 0.34, it gives a higher dividend than the likes of Apple. Apple was, I think, 0.23. So it gives a better dividend than the likes of Apple. But this is one that you should have in. This is a stocking filler for me as well. 2023, it's not going to return you 50, 100, 200%. It's not a growth stock. This will give you nice and steady returns year on year, in my opinion, from where it is now. Probably the third best one for me is Nvidia. Okay, Nvidia. So Nvidia is one of these chip manufacturing companies. They're in laptops, they're in mobile phones, they're in just about everything. They're one of these companies that is just taking the world by storm, and they're doing some really, really good stuff. I know some of these mobile phone companies take some of this stuff in-house, and I know Apple is taking a lot of its stuff in-house, which may affect it. But the idea is then that leaves them open for to go and fight for other business rather than having a monopoly with sort of the likes of Apple or any of those other major manufacturers of phones. Now, if we look at the likes of Nvidia has had a pretty torrid time since it hit its high in the back end of 2021. Now, there's a few reasons for the likes of this. One of the reasons is that we had Suez Canal, we had the likes of the supply chain problems, we had the likes of chip shortage, we had the likes of a copper shortage at one stage. So they've had a really, really bad time of it. And then obviously the global market has taken a bit of a downturn since then as well. So again, it's had a pretty torrid time down to here. And again, look, that from the high to the low, that has dropped, what, just under 70%, 69% overall. Okay, so for me as a company, this is highly valuable now as a company for me. This is something that I am happy to invest in and have invested in already in numerous occasions. Let's have a quick look at the earnings. Now, earnings are pretty decent. They're obviously not as good as the likes of Nike, and not quite as good as the likes of Apple's. But again, the last bad earnings was 2015, and then we had one here in the middle of 2022. Is it? Bear with me. In the middle of 2022. So its last earnings was pretty poor because of the said drop here, because of the said things that were going on. Now, they seem to have got their act together a little bit. They've started innovating. They've started to get the chip manufacturing going again. And also they have, for me, they're undervalued at the present moment. So this is more of a growth stock than the other two staples that are you can just hold on to and they will make nice slow returns. This could make 100-200% returns in 2 to 3 years. Okay, that's the kind of movement that this could have over the next 2 or 3 years, and this for me is something that I am happy to put in. Again, it gives a dividend as well, and the dividend is 0.004, so it gives a really small dividend. You're not going to retire on that dividend, but it's a nice little bonus as well. And if we look at this, the dividend generally comes out. The ex-dividend date is slightly after the earnings. Okay. So that's the ex-dividend date. So it's not the date it's paid. It'll be paid in December, so it's paid a month later. So and why the dividend date is marked there? So that's the ex-dividend. So you have to own the stock before that date. Okay. If you own the stock on the 30th of November, you would not have got that dividend. If you had it on the 29th of November, you would have got that dividend in December. So if we look at the beginning of this year, so 2023, if we look at this here, beginning of 2023, somewhere around there, and this is already up 34% since the beginning of 2023. So there's been a little bit of a bull run on the likes of this. Yes, we are coming to a horizontal level there. Absolutely, it's hitting this horizontal level. I would expect some sort of rejection on it there, and let's see how that sort of plays out. You could take a cheeky little short there if you wanted. Now, again, just because I'm bullish on something doesn't mean that we can't trade it as a CFD. There's absolutely nothing there. Or if it breaks and retests, that could be a nice little long there at that particular point. But again, as an underlying asset, as a stock, this for me is something that I have loaded up on. This is something for me, a pick for 2023 that should go on, and I would expect that to more than likely make higher highs by the end of the year. From where we are now, the where it previous was is an 80% return on investment already, but I'd expect that to make higher highs before the end of the year. And then the last one is very familiar to us. It's one that I've harped on about before, and you guys can probably guess it, is Crox. So Crox is something that if anyone is in my Discord channel or anything like that, we're already in this. We're already in this, and I think we're about 20% up already on it, if I'm not mistaken. We've 3 or 4 positions on this already, and if we have a look from the high, Crocs are those ugly shoes that continue to skyrocket. Yes, they're super comfy, but they look awful. If we have a look at this, it dropped 74% in that market drop, okay, which was a pretty big drop. It was something that we didn't want to see, but the difference in the likes of this and the likes of Apple and all the rest of them, green. The earnings consistently continued to be green now, and they weren't just barely green. If we have a look at this, nearly 9% green. Revenue was up nearly 0.3%. Look, 31%. Revenue was up 6%. Okay, up 19%, up 2.2. Okay, revenue up 13, or shares up 19, earnings per share, and then revenue is up 4. So look, they have continued to absolutely smash the market out of it. Now, if we go back here historically, look what we were doing. We were trading this off here. For me, this was way overextended by the time we saw it. So we actually traded this as a CFD. It's come back down here, hit somewhere around the bottom here, and this is to buy bucket loads of this company at the minute. They just seem to be a well-run machine. Okay, 2017 was their last sort of bad patch of earnings. Look, we've had one in 2020 after the pandemic that dropped, okay, 30% down, 5% down in earnings, and then directly after it, 924% up and 32%. So anything that was lost in this particular time was clawed back instantaneously on the earnings, revenue, so on and so forth. So for me, this is a really well run company. Yes, we're a little bit late to the boat here, or a little bit late to the party, but for me, if this continues to run as it is, we still have 47% to the previous high. Now, ideally I'd like this to come back. So I wanted this to come back to here. It didn't quite come back to sort of this triple bottom here. But ideally, I'd want that to come back to about there for me to be looking to trade this or potentially scale into another position on this. But if this drops, just say for instance, I am wrong and I think that 2023 continues to drop, this will be something that I will continue to scale in over 2023 if this continues to drop. If the stock market continues to drop, if the market cap continues to drop, if the whole sector drops, I will continue to buy this company. To me is one of those gems that they're just a well-run company. Unless something fraudulent or something comes out like that, I can see this being much higher in 5-10 years time. If you like what you saw, please click a follow, subscribe to the channel. I run these every Tuesday, so at 1 o'clock they go live every Tuesday. So thank you very much. Hope you have a lovely evening, and I will speak to you all next Tuesday. Bye bye.